The stock plunging 45% after the New York Federal Reserve and JP.
It's March 2008 and Bear Stearns is collapsing overnight. Lehman Brothers soon follows, defaulting on billions of mortgage-backed securities. The entire financial system is imploding in real time, and when every major bank is on the brink of collapse, only one institution gets the call to save the system: JP Chase. Now fast forward to 2023 and history is repeating itself. Silicon Valley Bank fails in 48 hours, First Republic Bank follows right behind it, and once again, the government turns to the same bank. So why is JP Morgan always the last bank standing? And how did it become the most powerful financial institution in America? Today, we break down the full story. Now, if you've been following this channel, you know that JP Morgan is where I began my banking career, and so doing the research and putting together this video was really fascinating for me. What I'll be doing today is walking you through the origin stories of Chase and JP Morgan, how the two merged together and persevered through the Great Recession under the leadership of Jamie Dimon to become the most powerful bank in the world today. It's a story that surprisingly involves betrayal and death, strategy and power, and I'm sure you'll never think of JP Morgan the same way after you watch this video. Our story starts all the way back in 1799, long before finance bros were wearing Patagonia vests and building DCFs. John Pierpont Morgan won't be born for another 4 decades, but the Chase side of JP Morgan Chase is already taking shape with Aaron Burr and Alexander Hamilton, the guy they made the Broadway musical about. Hamilton was America's first Treasury Secretary, and he founded the Bank of New York to control New York's early banking system and dominate the financial world. Burr was his political rival, and he needed a way to compete, but couldn't legally create a bank, so he does something sneaky. Burr creates the Manhattan Company, which is officially a water supply company, but buried deep in the charter was one small clause: any excess capital could be used for other financial activities. Translation: this company was secretly a bank, and this is honestly one of the earliest regulatory hacks in American finance history. Burr and Hamilton's rivalry reaches an extreme when Burr shoots and kills Alexander Hamilton in the infamous 1804 pistol duel, and funny enough, JP Morgan Chase owns that dueling pistol today. Now, all of this matters because the Manhattan Company that Burr founded quickly started taking deposits, issuing loans, and functioning like a normal commercial bank, and eventually became the Bank of Manhattan, which later merged with Chase National Bank in 1955 to create the Chase portion of what we know today as JP Morgan Chase. So if you think about it, Chase's origin story starts with a political rivalry, a loophole, and a gunfight, probably not something most people know. Now let's go to the JP Morgan side, starting with the iconic founder, John Pierpont Morgan, who actually preferred to be called Pierpont. So for the rest of this video, that's what we're gonna call him. Pierpont was born in 1837 to a successful London merchant banker, so banking was already in his blood. He was educated in Europe, trained in London finance, and surrounded by wealthy investors his whole entire life. Fast forwarding to 1871, Pierpont partners with Philadelphia banker Anthony Drexel to create Drexel Morgan & Co. with a simple but insanely powerful model. Their goal was to raise money in Europe and invest into fast-growing American industries like railroads, steel, and electricity. They underwrote bonds, financed expansions, and consolidated industries, largely creating the groundwork of investment banking as we know it today. In the 1880s and 90s, Pierpont built a reputation and was nicknamed the Railroad Doctor. He would step into failing railroad companies, send corrupt management to the shadow realm, reorganize debt, and merge competitors and stabilize the business, basically creating the playbook that private equity firms use today of restructuring and roll-ups to lead corporate turnarounds. He then starts pulling off some insane moves, financing Thomas Edison to help form General Electric, and buys out Andrew Carnegie's steel company to create US Steel, and merges multiple steel companies to control 2/3 of America's steel, and ultimately create the first billion-dollar corporation in American history. So yeah, this guy is not just in the money business, he's in the empire business. Then came the moment that defined Pierpont forever, the panic of 1907. During this time, banks started failing, the markets crashed by 50%, and there was no Federal Reserve with a money printer to save the economy. And so who becomes the central banker? John Pierpont Morgan. He literally locks bankers in his private library in his mansion until they agree on bailout terms, and while he saves the US economy, people realize that one man wields too much power, and that's what leads Congress to create the Fed a few years later. Pierpont dies 6 years later in 1913, and his firm, which had been rebranded to just JP Morgan, continued to operate successfully until the Great Depression hit, and the government blamed big banks for being too powerful. And so in 1933, Congress passes the Glass-Steagall Act, which forces banks to choose between either commercial banking or investment banking, so JP Morgan splits itself in half. One half becomes JP Morgan & Co., which is a traditional commercial bank, while several partners spin off the investment banking business and creates Morgan Stanley, yes, the same one that competes so heavily with JP Morgan today. Alright, so now that you know the history of each side, let's talk about the series of mergers and acquisitions that created the financial giant we know today as JP Morgan Chase. Throughout the latter half of the 20th century, Chase Manhattan Bank grew aggressively in retail banking, deposits, branches, credit cards, and consumer lending, basically becoming Main Street America's bank. And then in 1996, in a landmark transaction, Chase Manhattan merged with Chemical Bank, creating the largest US commercial bank with $300 billion in assets. Now, if you're an astute viewer and have been following along, this is where you may be wondering, okay, Chase is a commercial bank, but isn't JP Morgan also one after the Glass-Steagall Act? JP Morgan was transitioning to investment banking as regulations were slowly loosening up. JP Morgan was granted permission to underwrite corporate debt securities in 1989 and became a top 5 player in securities underwriting by the late 1990s. And then in 1999, Congress passes the Gramm-Leach-Bliley Act, which repeals most of Glass-Steagall, and suddenly banks are allowed to take deposits, make trades, and underwrite deals all under one roof. This means universal banks are back, and now scale matters more than ever. And so this is when the magic happens. In 2000, JP Morgan combines its resurging Wall Street business with Chase's Main Street scale in an industry-shaking $31 billion deal that creates JP Morgan Chase. But the real leap comes in 2004 when JP Morgan Chase merges with Bank One for $58 billion, which on paper expands the company's retail footprint, but the real prize was Jamie Dimon, who immediately becomes president and COO.
Hedge fund manager Bill Ackman posting an essay on Twitter calling for Jamie Dimon to run for president.
Well, I think Jamie Dimon actually would be. I think he'd be terrific because I think he. If we did run into problems in markets, I think he would actually be the best person you could have.
Dimon is the most famous and powerful banker in the world today, and the way he handled the Great Recession in 2008 is pretty legendary stuff. Back when I was a banker at JP Morgan, I saw him in the flesh twice, and the aura that he has when he steps into the room is absolutely insane. But what most people don't know is that he was unexpectedly fired, and some say betrayed, by his mentor Sandy Well when he was the president of Citigroup. And for his next gig, he turned around the struggling Bank One into a profitable company through ruthless operational discipline before it got acquired. Dimon would become CEO of JP Morgan Chase in 2005, and immediately after, he does something completely contrarian. From 2004 to 2007, all of Wall Street went crazy with subprime mortgages. Goldman Sachs, Morgan Stanley, Lehman Brothers, everyone's making hundreds of millions of dollars.
How many loans do you write each month?
About 60.
Yeah. What was it 4 years ago?
10, maybe 15.
Yeah, I was a bartender. Now I own a boat.
Dimon takes the opposite approach and starts building what he calls a fortress balance sheet, consisting of conservative, boring, strong capital reserves. Wall Street thinks he's an idiot and thinks he's leaving billions on the table, but little did they know that he'd have the last laugh. In December 2007, the Great Recession hits, Bear Stearns collapses the following March, and the Fed, which ironically was created because John Pierpont Morgan was seen as having too much power, calls Jamie Dimon and begs JP Morgan to acquire it. Shortly after, in September of that year, Washington Mutual fails, which at the time is the largest bank failure in US history. The FDIC seizes it, and JP Morgan picks up the deposits and assets. The banking industry receives a $700 billion government bailout, and JP Morgan receives $25 billion as a loan, but doesn't even really need it and repays it very quickly. Kind of crazy to see how history repeats itself, because 100 years after Pierpont saves America from the panic of 1907, his legacy firm JP Morgan plays a crucial role helping stabilize the US economy once again, yet afterwards, Dimon is vilified in the media. But anyway, long story short, JP Morgan emerged from the 2008 crisis even bigger, even more dominant, with even more market share. But this would just be the beginning of JP Morgan's dominance. So let's talk about JP Morgan's rise to the present day, which hasn't been smooth sailing and came with many new crises. Dimon experienced his most embarrassing episode ever in 2012 with the London whale fiasco, where a trader lost the firm $6 billion. Just a year later, JP Morgan settled with the Department of Justice for $13 billion for misleading mortgage-backed securities before 2008. Then later in March of 2023, Silicon Valley Bank collapses overnight, marking the second largest bank failure in US history. Signature Bank goes next, First Republic Bank follows right after. And yet again, the bank that saves the day is JP Morgan Chase. All things considered, the firm has weathered many storms and today dominates in both commercial and investment banking. Since 2007, JP Morgan has grown its assets under management from $1.6 trillion to $4 trillion today, making it the largest bank not just in the US, but in the world. The company has grown revenue from $71 billion to $181 billion in 2025, and net income from $15 billion to $57 billion. The company sits on top of the league tables in investment banking and often wins M&A mandates due to its ability as one of the only banks able to finance the largest transactions in the world, because if you need $10 or $50 billion, there's no better bank to call than JP Morgan. Now, I don't need to keep glazing JP Morgan, I think you get the point. This bank is the most dominant, like Shaq, in large part thanks to Jamie Dimon's 20 years of leadership. The next real big question looming over the company is not necessarily just who will fill his shoes, but if anyone can. JP Morgan will truly be blazing a new path once Dimon leaves, and maybe that'll be a topic for a video 5 years down the line. JP Morgan Chase isn't too big to fail. It's become so essential to American capitalism that when the system is on the verge of breaking, the government has no plan B, because JP Morgan Chase usually is plan B. That's the position that the firm has built over the past 150 years. From JP Morgan locking bankers in his library in 1907 to Jamie Dimon rescuing the financial system in 2008 and 2023, the pattern's been the same for over a century. When a crisis hits, JP Morgan is the one left standing, and every time it saves the system, it gets even more powerful. Hope you enjoyed this deep dive into JP Morgan's history, and by chance, if you're watching this because you're aiming to break into banking, I recently put all of my best advice into a 15-part email newsletter that covers every step of the banking recruiting process, from my experience as a JP Morgan banker, recruiting captain, and from helping hundreds of candidates break into banking at all the top banks. It's completely for free, and if you're interested, sign up on rareliquid.com or scan the QR code on the screen. With that said, this is a new type of video for me, and if you enjoyed it, please let me know down in the comments and also which bank I should cover next. Thanks as always so much for watching, and hope to catch you all in the next video.